Hello and welcome back to your South King County real estate update. My name's Sarah Eggleston with John L. Scott and Stone Egg Realty at John L. Scott, and I am here to deliver your weekly real estate news for South King County. I'll go ahead and jump into the slides. So today is December 3rd. It is the last month of 2021. Can you believe it? This year has gone by insanely fast. And it is Blue Friday. Got my colors on, so I hope you do too. Last game was on Monday, and Washington did take away the win, but it was so close. Seahawks came back really intensely at the end there, and then just didn't quite make that last little bit, but it was a really good game. And our next game is on the 5th, so a couple days from now. Make sure to tune in at 1:25 to cheer on your Blue. They'll be playing San Francisco. So what happened this week? So this week we had, last week we were supposed to close on a buyer deal that I had going on, but we showed up for our final walkthrough. And there was a few items that the seller had agreed to fix that had not been taken care of. So I called the listing agent and said, hey, did you know that this hasn't happened? And we tried to, there was a little bit of a title issue too that we had to figure out. So we were going to close Monday anyway, since the escrow offices were closed for Thursday and Friday last week for Thanksgiving. So we got postponed until Monday. And when I went back over the weekend, the items, some of them had been completed, but not all of them. So I reached out to the listing agent. I was like, at this point, we just got to do a seller credit so that the buyers could take care of it so we can close. So that is exactly what happened. We got a little bit of a credit, cash at closing issued to the buyers, and they can now hire a contractor to come out and have the work done how they would like it to be done. So that caused a little bit of a delay, but really, I mean, it was only one business day, but it was from Wednesday to the next Monday. But we were finally closed out on that. So that is super exciting. This couple had lost out on a number of deals, like 4 deals, I think, about before we got under contract with this one. So this is a big win for them. After rising all year, Seattle area rents start to cool down. That probably won't last. So in October, Seattle rents hit 1,726 for a 1-bedroom on average, and that was down $4 from the month prior. But that was really not enough to make up for the increases we've seen throughout the summer. Generally, in the rental market, this follows the housing market as well. There's a little bit of a slowdown in the winter months because just fewer people in general move. So whether we're talking about rentals or purchases, fewer people move in the winter. Generally, if there's open units, there may be some benefits offered, either lower rent or some incentives to sign your first month's rent there. And that's something that we kind of see more in the winter in general than in the summer. But these recent small $4 drop did not make much of a dent in the overall prices. So here is the average rent. Top one is Bellevue, followed by the green, which is Seattle, and then Kent is the blue below that. And you can see in 2020, there was this big dip in Seattle and Bellevue, and then really raised up, and now we just ticked down ever so slightly. So this little tick down is not nearly enough to make up for the huge increase that happened over the past 12 months. So, but you can see that dip did not happen in Kent, Linwood, Tacoma, because people were moving out of the Bellevue and Seattle, these more populated areas, to places where they could afford more land and all that. So these little dips didn't happen in the further out areas. The remote work in 2020, those that were able to work remotely, in general, those people have higher paying jobs. So these people with higher paying jobs were able to move out from the city to further out to outlying areas where they could have a larger space. But because there was all this money flowing out into the suburbs, prices in the suburbs for rent really, really increased. Whereas that money was moving away from these more populated areas. So those populated areas had a lot of rent decreases or incentives that were offered to try and get renters into those spaces. We didn't see that in Kent or Linwood. Right now, there's very little available. I have heard of talked to a couple friends that are looking for rentals or have been looking for rentals recently, and it's not a great market. There's a lot of competition for each unit that comes up. The vacancy rate in Seattle is at 4.6, down from 7.1% that it was in late 2020. So a lot more of these units are filled. There's a lot of reasons for that. Some of these renters may have been ready or close to ready to purchase a home, but the home housing market and the runaway prices kind of prevented them from doing that and kept them in a rental. Some people are just moving back to the city in anticipation of their work from home ending, but there is a lot of people that are occupying homes. Oh, plus there was during the pandemic, there was a lot of kids that moved back in, well, adult children that moved back in with their parents to save money, help out around the house, various reasons. But those people are kind of moving out now. We're seeing a lot more splitting of households. So there are a lot more houses or rental units needed, and there's just not that much available to choose from. So Zillow is selling off homes that shutters its house flipping business. About a month ago, Zillow announced that they were going to stop their Zillow Offers program. That was a program that they would pay what their Zillow's estimate was for the home. They ended up losing a lot of money on that on that whole endeavor. I thought this was a pretty concise way of saying it. After months of upbeat comments from the business, Zillow executives said they had faced longer than expected timelines to fix up and resell homes, and the company's algorithm had failed to accurately predict prices. So I personally find a little bit of humor in this sentence, because there's so many times that I've had talks with people about the value of their home, and they go, but Zillow says it's worth this. And Zillow is a computer. They have an algorithm that analyzes the property compared to other properties, but they don't know the condition it's in. It's a very flawed system. So this is just a good example of it being a flawed system, because really you need to have that human element to value a home. There's just no way around it. There's so many variables that this computer algorithm just can't adequately do it. In the third quarter, Zillow wrote down about $304 million worth of homes it expected to sell at a loss, and projected additional losses of $240 million to $265 million in the fourth quarter. So some of these must have been incredibly off. I'm sure that the renovation had something to do with it, with everybody's having delays on products and that sort of thing. So I bet their hold time was a lot more than they thought it would be. But this is still, I don't know, it's not really that shocking for me to see, but I see how it could be shocking for a number of people. And that brings us to our market stat minute. In the last 7 days, there were 403 new listings in King County, 505 pendings, and 725 sold. So you can see our pended listings like dove down pretty significantly here. We did get far more listings than we did last week, but that's simply because of the Thanksgiving holiday. So we're still on this downward trend. It's just not a very good idea to list on a holiday weekend. And our chairman and CEO at John L. Scott, Jay Lennox Scott, sent out his November recap, and we have on average about 0.3 months supply. So this is a theoretical number. If no new homes came on the market starting at the beginning of the month, we'd run out of homes in 0.3 months. 88% of homes are going pending within the first 30 days. And that is creating an extreme shortage and in turn an extreme frenzy on the buyer's side of things. There's just not that much to choose from. And our new resale listings, this is our new listings that are coming to the market. The yellow is 2021. And you can see so the red was 2020, and you can see we had that big dip from the beginning of the pandemic. And then by July, we kind of fell back into the same general pattern of how many listings are coming on the market each month. But if we look at our buyer contracts, the red is 2020 again. You can see that dip down at the beginning of the pandemic and then skyrocket above where our normal line would be. And we have remained elevated compared to 2018, 2019 for the entire year. We're following a similar shape pattern, but the intensity is higher. And this is kind of combining those two graphs for the last 4 years. The green is the listed and orange is pending sales. So you can see there is a big gap between 2018 and 2019. There's a gap between the pending sales and the listed. We hit 2020 and that gap just disappears. We have had intense buyer demand, especially if you compare it to the amount of homes that are on the market since May of last year. And our showing traffic did rebound after that dip for the Thanksgiving weekend. I think we'll expect to see slightly higher traffic than normal, but yeah, we'll see where that goes, see how much this rebounds. I don't know if we'll reach this 2020 demand, because November, December in 2020 was more intense than any November, December recorded history for real estate. But this whole dip is good to see that we are rebounding back and buyers are still active in the market. And last week, we had our interest rate at 3.1% for our weekly average. This week, it has remained almost completely flat, and we're at 3.11. A year ago, it was 2.71. So we have reached that point where we're higher than last year by quite a chunk. But the Fed is indicating that it may turn towards tightening credit more quickly than previously indicated. So this is to deal with the inflation that's been happening. Things are costing more. The Fed's trying to reel that in a little bit before it goes too crazy. But the new variant, the Omicron variant, is wreaking havoc in the mortgage market. For our daily mortgage rate, we're at 3.2, but that's actually down ever so slightly from yesterday. News of the inflation rollback or bond purchase rollback, it made things go up a little bit higher, but Omicron is pushing the rates back down again, just because of that fear that the economy might shut down or how it's going to affect things. Last week, as I said, the mortgage rates did remain pretty flat despite the Omicron variant. It's like I said, balancing those two things. But I wanted to bring up this article because it actually mentions the increasing conforming loan limits. On a general on a standard loan, like a conventional or FHA, there's these standard loan limits, and they're increasing those by about $100,000 to accommodate the increase in home prices. So these homes, anything above this amount would require a jumbo loan if you need a loan for a larger amount than the conforming loan limit for that county. But basically, increasing this conforming loan limit means that more people will be able to afford more expensive houses. So they may not have qualified for a jumbo loan before, but they qualify to go up higher on their conforming loan. So they'll be able to go up a little bit more. I did take a snapshot here of our King Pierce Snohomish. We are in a higher price bracket just because of the higher prices in our region. So ours is 700. It falls within this range. I did have it written down somewhere, but it's not available at the moment. This is good to see for those homes that were, just over 700 that people couldn't quite get a loan for. Now they'll be able to. And if you have any questions, please feel free to reach out. I would love to have a conversation with you about the real estate market in your specific area or an area that you're interested in possibly moving to. So please feel to reach out. My number and email are on the screen. I will be back here next Friday at 3 p.m. to deliver your real estate news. So I will see you then. But for now, Sarah Eggleston from Stone Egg Realty signing off. Have a fantastic week.